Joining me today is Deane Thomas from Advanced Mortgage and Lending Solutions, and we're here today to talk about mortgage rates. Deane, thanks for joining me.
Thanks for having me, Wayne.
A lot of changes since the start of the year. January 1st, the new stress test or mortgage qualifying rules. What has that meant for people looking to buy a mortgage, to get a mortgage?
That's correct. So from the 1st of January, we've got the B20 guidelines that came into play, and that has affected anyone putting down 20% or more on a purchase. And it is a stress test that is either the benchmark at the moment or 2% higher than the contract rate that we can get the client. And how that's affected clients is around 18% of their buying power has been reduced.
18%. So give me an example of, say, $500,000 that a person qualified for prior to January 1. They're able to qualify for
closer to 420,000.
That is a significant reduction.
Big reduction. But that guideline has not been put in place for everyone. We do still have some lenders, credit unions specifically, that aren't federally regulated and have not adopted the change as yet. One or two of them have, but a handful of them have not. So there are still options out there for clients that are tight with 20% down that need a little extra help in getting into a home a little bit of a higher value.
And that depends on how long that they are going to withhold from joining the rest of everyone else.
We don't know, and we keep asking the question because as of today, we're still qualifying clients that we're sending to them at contract rate and not at the stress test. And they just tell us right now there's no plan to adopt it, but they can't tell us if it'll be indefinite or not.
Can you hold the rate with a credit union?
No.
All right.
So it's kind of live deals. They don't like to do pre-approvals. They're very different. The credit unions I like them. They're a little bit more people as opposed to numbers. For me, the banks are, I would say, when I've got a strong story and weak numbers, it's credit union all the way, because they look at the history a little bit more and they look at the circumstances why a client maybe doesn't qualify at a bigger bank. Whereas the bigger banks will be 80% number, 20% story. If you don't fit in the box, you decline.
They do have some flexibility though.
Absolutely. Everyone's got a little bit of flexibility. Just depends on what the story is and what the different lenders' guidelines look like. And having over 59 lenders in Canada, we've got a lot of lenders to compare with, and they've all
59 lenders that you as a mortgage specialist can refer to get the best rate for your client.
That is correct.
Now, each of those lenders, because of these changes that came down January 1, has a whole raft of variables, qualifying rules per se, with a mortgage approval process.
Yes, the rate sheets have just gone from simple to so complex. Each lender have got so many variables. They've got a matrix that they look at on their rate sheet, and the variables are you either an insured buyer, you're insurable, you're uninsured, you're business for self, your loan to value 5%, loans 80% or 95% or 60%, and all of those things add to either your rate they've got like a base rate, and then there's premiums that get added, or you fit in here or you fit in there, and it's kind of it's tricky to say where the best rate is right now, because it depends on the client, their beacon score, how much they're putting down, and then we can go shopping.
Again, 21 different variables per lender.
Per lender.
Wow. But the bottom line is that you can still look for the best rate for a client.
Absolutely.
And that's the goal.
It's always the goal, And like you say, that's why it is always better to use a mortgage specialist if you can. Even if you've got a rate from your bank, phone someone up.
Get a second opinion.
And call someone that's got an eye on all the various lenders' rates, because we've got a lot of lenders out there. You've got the big banks that you can walk in and play with. Then you've got the mono lenders. They're not open to the public. So there are some amazing rates out there, but they're not available to you through anyone but a mortgage specialist. So it's always good to make that call and make sure you've got what you need, and it's the best.
The one advantage that I know of in dealing with mortgage specialists is that you are more readily available than a mortgage specialist at one of the big banks, because you've got a mortgage employee at the bank, and then you may have a mortgage specialist, but because of the demands on their time, they are not as readily available as a mortgage specialist, say with Advanced Mortgage Lending Solutions.
Yeah, they kind of run according to the work hours, and you've got to schedule an appointment, and it's a little more tricky. With us, we can take the call at 8 at night or 9 at night when it's convenient for the client, and we can do it at your coffee table at your home if that's what you prefer.
So you do make house calls?
House calls, absolutely.
Just like the old doctors. All right, and the other thing too is if a person has any questions about a mortgage, call someone who has knowledge.
Absolutely, and by calling a mortgage specialist, at least you're getting someone that has an eye on all of the options out there. So we're not tied to one lender. We get paid pretty much the same from each one of the lenders. Our services cost the client absolutely nothing.
And that's an important point, is that you are not tied to any one lender, so you are really acting in the best interests of your client.
Always.
What about people who are new to Canada, Deane, and you can speak with great experience about this as well. Are there different rules for landed immigrants who have become permanent residents?
Absolutely, there are different rules. So we've got lots of products from the insurers for new to Canada, and it all, again, boils down to you're new to Canada. How long have you been here? Have you been here a month? Have you been here 6 months? Have you been here a year, 2 years? How much down payment do you have? Where's it coming from?
When should they start looking for a mortgage?
You know what, if they could start looking before they arrive, it's best for me, because there are a lot of documents that I can use from the country you originate from to help me prove who you are and build your credit without having a credit score in Canada yet.
Right, and that's where it comes down to, is that credit score and that history, financial history.
Absolutely, because new to Canada, the lenders here don't know who you are, they don't know your history, they've got no reference point of where you've come from. So if you've got a good history or something to work with from the country you've originated from, we'll use it and we'll build that story around that. If it's not quite that way, then normally we need depending. If you're salaried, within 3 months we can do something, but most of the time to build credit and you don't have a credit score, it's 12 months in the country, and then we'll be using a lease agreement with 12 months bank statements to prove your credit.